Hi, everyone. Thank you for joining us for the Black Diamond Ball workshop series with RBC. Today, we're going to be talking about our Canadian small business financing program. My name is Kazeem. I'll be one of your co-hosts. I am a business account manager with RBC, and I've been with the company for just over 8 years. And as a business account manager, I do help small to medium-sized businesses with their financing goals, payment services goals, just making sure that I'm the first point of contact on their inquiries and helping their business grow and providing new and innovative ideas. And I also wanted to actually introduce you to my co-host, Louisa Boachie Freeman, who will be able to tell you a little bit about herself as well.
Thank you, Kazeem. My name is Louisa, and I am with RBC Royal Bank. I've been with RBC Royal Bank for 12 years, currently a business account manager, assisting clients in setting up their businesses. And my goal is to assist small businesses and see them thrive and prosper. So we're going to dive in and talk about one of the programs that really has been a great benefit to our small business clients.
Perfect. Yep. So that'll be our Canadian Small Business Financing Program, short-term CSBFP. Next slide. So we're going to be going over the program and the criteria, as well as the resources that'll be available to our clients if they have any other additional questions, just to preempt them before applying. On our next slide, what we're going to show here is just really a breakdown of what it is. So the program is really a program that's going to allow, whether it is a new business or an existing business. So a new business, we're going to consider anything under 2 years as a startup. Anything outside of that would be just considered a matured business. And that, what the program is going to be doing is to help increase the availability of financing for the establishment, expansion, modernization, and improvement of the small business. It was established in 1999 to replace the Small Business Loans Program, which began in 1961. Between the years 2015 and 2019, we have done over 27,000 loans, advanced for over $5.15 billion. What we estimate, though, is that without that program, it is honestly expected to probably about 80% of our clients that apply for loans would not be granted. Essentially, this program is mainly used by startups, as we can see by the 60% loans there are meant for them. We also, it has included Profit 500 ranking for 2015 to 2017. 6% were former CSBFL borrowers, so about 59% there. 59. And then on our next slide here, we're going to be showing a bit of a graph that essentially provides the number and value of the loans between 2014 and 2019. As we can see here, throughout the years, the amounts in terms of total number of actual loans and dollar amount and the actual application number has steadily increased. So the value of the loans have gone up on top of the amount of people that have been applying for it. And as we've noticed here, that throughout the years, it has increased, but also during the past 2 years, we understand that during the pandemic, more of our population has decided to go into business for themselves, to take that risk, just because whether they were laid off or other circumstances came up where they felt like they would want to be owners of their own business and run their own operation. And the Canadian Small Business Financing Loan has been a large factor in helping brand new businesses help them get off the ground. Through our next slide here, we're going to show a percentage of distribution throughout all of Canada from 2014 to 2019. As we can see here, we have British Columbia at 15.6% percentage of total small businesses, and then 8.3 percentage of total Canadian small business financing. So just a little bit more than half. As we move east to Alberta, we've noticed that they may have less of the population total that actually own businesses, but in terms of the percentage of them actually taking from the Canadian Small Business Plan, they're at a higher rate than BC, than most of the other provinces, minus Ontario, Quebec. We have Saskatchewan, population's a little bit smaller, so we understand that the total amount of small business owners and then also versus the amount of small business borrowers for the program are going to be smaller, just like Manitoba. And then we have Ontario, which is going to take up just a little bit over the third of total businesses in all of Canada, as well as a little bit over third of all the Canadian small business financing loans in Canada as well. Next, we have Quebec. As we can see, they're the second, so 20% of all small businesses, which makes sense due to the population size, and a little bit more, 25% of actually all the Canadian small business financing programs that we offer. And then we can see, New Brunswick, Nova Scotia, PEI, Newfoundland with smaller ratios, but they're still contributing and still opening up businesses. I know that we have Yellowknife, Northwest Territories, and Nunavut at the top there. Very minuscule, but it is something that we're always trying to reach out to make sure that we can help everyone in Canada, not just the major provinces. Next slide I would like to talk about is going to be the eligible businesses. So as I'd mentioned, whether you're a startup or an existing business, you do need to be an existing business for profit, and your gross annual revenues, if it's a startup, that means your projections are going to be either $10 million or less. Your business can be a sole proprietorship, partnership, corporation, or cooperative. Any of those types of businesses will be eligible for the program. Farming, holding companies, religious, charitable, and non-for-profit organizations are ineligible. The reason being, for farming, we have other programs for farming clients. Holding companies, that because it's a holding company, there's no real operations other than generally just holding funds. There would be no need for financing. For religious, charitable, and non-for-profit organizations, a lot of those companies deal with either getting grants or donations. So we have other programs suited for their needs. And then service industries, incidental to agricultural, those can all take part in the program. So I know some people are thinking, agricultural, but farming. So it is a little bit different. And so farming, that's why farming would be excluded specifically, whereas agriculture would be included. And then our next slide that we have here are some of the eligible and ineligible expenditures. So essentially, these are things that we can finance for. So trade-in equipment, computer software, certain website development costs, transportation installation, non-fundable taxes. Those are some of the things that you can include in the financing. Ineligible expenditures are going to be working capital, purchase of shares in a corporation, franchise fees, vendor take-back financing, pre-existing term loans, borrower's labor, and refundable taxes such as GST, PST, and HST. So working capital is going to be essentially capital injection, funds that are needed to operate the business. That's not something we would be able to finance. Purchasing shares, so you couldn't purchase into a company by getting a loan through us. Franchise fees as well, those are something that we do expect our entrepreneurs to actually have the money for, because we do want to make sure our entrepreneurs have a little bit of stake in actually the business where they've actually put up some of their own capital. Vendor take-back loans, that's also something that's not a part of this program. Pre-existing term loans as well, because if you've already received the loan for this, there would be no need to get another loan for the same item. And then also your labor. So if, let's say, you wanted to do leasehold improvements, but you did them yourself, you couldn't charge your company for the labor that you did for your business, because it's still your business. And so that's something that we would expect you to have the financing for. And on our next slide, we are actually going to have the eligible assets and amount of financing. So the eligible assets limited here are so it's going to be equipment, leasehold improvements. With those two, you'll be able to go up to $350,000. If you want to purchase real property, so land and commercial building, that would be allowing you to go up to $1 million. But the program itself would be max at $1 million. So you wouldn't be able to, say, get $900,000 for a land or commercial property in financing, and then an extra $350,000 for equipment and leasehold. It would have to be a total, but the equipment and leasehold couldn't pass $350,000. So you could get the equipment and leasehold improvements for $350,000, but then if, let's say, the building was $650,000, just a little bit less, because you have to take into account the 2% registration fee, but the total loan itself could not surpass $1 million. But to go over $350,000, real property does need to be involved. So as I've mentioned here, and then related borrowers may each access the maximum loan amount as long as they pass the independent small business test. And so related borrowers could be if the business owner has other businesses and that they want to apply for it as well. The independent small business test would be essentially, we'd have to make sure that they're able to get approved on their own for the amount that they're applying for. The percentage of financing is negotiated between us and the entrepreneur. Generally, it's up to 90%, but it is always something when we can have a discussion on possibly financing the full 100%. So that'll be on a case-by-case basis, and we would discuss it at the time depending on what the item is that needs to be financed and how much, and what we're taking a look at here. Then on our next slide here, we're actually going to have some of the terms of the loan and fees. So for the terms, we go up to 10 years for leasehold improvements and equipment financing. For real property financing, that can go up to 15 years, but it's always a discussion to see what we can do on terms of the property financing. The loan amortization cannot be longer than 10 or 15 years. The maximum interest rate is going to be a variable rate, which is currently 2.45 as of February 22nd, 2022, plus 3%. Then we do offer a fixed rate. That's going to be based on the actual posted rate at the time of the application, posted mortgage rate plus 3%. We normally advise our clients to take the variable rate because the rate is generally going to be lower. And also you do have the ability of making extra payments as you please without any type of penalty on the variable rate. As I'd mentioned, the registration fee of 2% is of the total loan amount that can be financed or it can be paid out outright. So depending if you wanted to go to the max, either $350,000 or $1 million, and you didn't want to add the 2%, you could just pay the 2% separately. And now what I'll be doing here is handing you over to my colleague, Louisa, to discuss some more of the details.
Thank you, Kazeem, for taking the lead on this presentation. At this point, I'm going to move on to the next slide, which is how we assess our clients during the Canadian Small Business Financing Loan application. As lenders, we must apply the same care and procedures in making and administering a CSBFL, a Canadian Small Business Loan, as we would for a conventional or a regular loan. The procedures include, but not limited to, the credit check of the borrower and guarantors, and also repayment ability of the borrower. Next slide. Other important criteria is that we include expenditures and commitments made within 180 days prior to the date on which the loan is approved. So what that means is that if the client has made any expenditures or purchases towards equipment or towards the leasehold improvement that they are applying for, we can actually include that amount and finance that as long as the invoices are 100 days prior to the dates that the loan is approved. Proof of purchase and payment must also be obtained at this point. Eligible amount of the loan in question is the lesser of the eligible cost of assets purchased and the eligible proof of payment. So if the client is presenting a cost of purchase of $300,000 and eligible proof of payment is less than what they are presenting on the invoice, we would actually provide or finance what is on the invoice. So the lesser of the two amounts presented to us. Next slide. The Canadian Small Business Financing Loan can also be used to finance real properties, provided that at least 50% of the property is used to operate the business. So when we're financing a property under this program, we have to make sure that the owner-occupied portion would be 50% and above, or at least not less than 50% being extended to somebody else in order for us to finance. There is also a 3-year rule that applies to this product, which is the intention of the borrower cannot be to sell, lease, or sublease the operational area for the next 3 years. The Canadian Small Business Financing Loan can also be used to finance real property. So as Kazeem mentioned at the beginning at the top of the presentation, we do have up to a total of $1 million, and that includes financing property. We can finance properties up to $750,000, provided that at least 50% of the property is used to operate the business. There's also a 3-year rule that applies to this product, and that is the intention of the borrower cannot be to sell, lease, or sublease the operational area for the next 3 years. So essentially, the property must be occupied and must be owner-operated for at least 3 years before, if it can be either leased out or sold to someone else. Next slide, please. Another condition for this program is appraisals. So appraisals must be obtained for non-arm's length transactions, purchases of all or substantially all assets of a going concern. So when a business is being purchased, what a going concern is if the business has been in operations 60 days prior to it being purchased, we would require an appraisal for such businesses. Now, the amount of the loan must be the lesser of the cost of purchasing and the appraised value of the assets. So if the cost of purchasing is, for example, $300,000 and the appraised value is $250,000, we are actually going to finance the lesser of the amount, which is the $250,000. Appraisal must not be more than 180 days prior to the loan approval. So it should be within 180 days prior, or it could also be after or during the loan processing. Appraisal must be made by appraiser member of the professional association, or an appraisal from a qualified individual can also be accepted if it's not from an arm's length. So appraisal for equipment and leasehold improvements can actually be done by a qualified individual who is not an arm's length. Next slide, please. Another condition required is security substitution and release. Primary security for this loan program is mandatory and must be first rank and valid and enforceable. If prior security exists, it must be the highest rank available. Additional security can be taken on any other assets of the business. A Canadian small business finance loan can also be secured by a corporate guarantee or a personal guarantee. As lenders, we must also conduct an on-site visit to reduce uncertainty towards valid and enforceable securities. So we always have to go out and make sure that if we're financing a building, for example, a commercial property, or assets or leasehold improvements, we must make sure that the business exists. There is a location for this business, and we actually have proof that the business or the location exists. Next slide. For more information for this program, you can always visit at www.ic.gc.ca. And you can also visit the canada.ca on the next slide for how to start your business grants and financing, business taxes, hiring, permits, and licensing and insolvency regarding your business. And this brings us to the end of our presentation today.
Thank you, Louisa. Definitely appreciate your aspect and your information on the latter half of the slides here. And now we've come to the question and comment section, and we will read out any questions and answer any questions or comments that anyone might have. All right, perfect. Hopefully we have some questions coming up here, and that we can absolutely get into them. And as you saw in the ticker below, you can reach Louisa or myself at either our LinkedIn or our RBC work emails. Perfect. We have a great question here from Natalie. What can the program do for her? So depending on the type of business that you operate, it's essentially able to really help with your startup costs if your business is a startup. With the equipment, usually comes, is quite a large portion of it, as well as leaseholds, depending on the place where you'll actually be operating your business. Not a lot of leases or where you rent space is going to be ideal for you right off the bat. So there's usually costs with construction renovations. So that's going to help as well. So really just to be able to help you cover the expenses, a lot of the expenses that come with starting your business up. And if it's been a business that's been in operation for quite some time, if you're looking to expand and you need to purchase more equipment, that's something we're always willing to help with as well.
And just to add on to what Kazeem said, the great thing about this program about down payment is you only have to provide 10% of the down payment of equipment and leasehold that we may have to finance for you. So the down payment is very reasonable in terms of compared to other programs where you need a higher down payment. In this particular program, it is only 10%, so it is quite affordable, like Kazeem said, for startups.
And then on this question here, that's correct. I believe when Louisa had mentioned the $750,000, that would be for our role as business account manager. We're able to do up to $750,000, but the program itself goes up to $1 million. So if that's something where that would be the case, then we would hand you off to a commercial account manager for a higher amount. But yes, in that comment, that's absolutely correct. It is up to $1 million for real estate. I think we'll hand that off to you, Louisa, because you had mentioned security.
Right. So what is the security I'm describing? So the security here would be the product itself that we're financing. We take that product as security against the loan, plus also your business itself. So we use your business. Your business is used as a general security against the loan, plus the equipment that we're financing. So if we're financing a property, the property is used as collateral and it's security against the loan. If we're financing an equipment or leasehold improvement, the equipment and leasehold improvement is used as security against the loan, plus your what we call the general security, which is your general business itself.
Thank you for the presentation, the comments on that. A specific business, I'm in the process of doing one right now for a nail and hair salon. So it's a franchise, and so they're currently in the stages of finding a location that'll fit their franchise needs. But yeah, it's a boutique hair and nail salon. So yeah, that would be a specific business that we have. Spas as well, in terms of the whole spa package. A restaurant, that's a specific business as well. Retail store, pretty much any business you can really think of. Like I even did a loan where it was for another franchise, but it was a coding franchise, coding for kids. Where they would come after school. This was pre-pandemic. They'd come after school, learn code, and we definitely did a business like that, as well as even desserts shops as well. So there's quite a large variety that you can choose from. So a house would not be eligible for the Canadian Small Business Financing Loan, unless this if it's a house, it's a residential home. So unless that's doing the business in there, but it would have to be 100, as Louisa said, the operations have to be at least 50% of the space being used for operations. And generally a home isn't something that we would use that for. We would probably advise a different avenue for that. And then since I mentioned the criteria there, so that would be considered farming. So we would do the cultural, we have another program for that. So we would do that instead of the Canadian Small Business Financing Loan. For this question specifically, because you already have quite a bit of a line of credit already, You probably are still eligible for it, but you'd most likely want to speak to your commercial account manager, as they may actually offer another program for you instead, as opposed to the Canadian Small Business Financing Loan. The reason being is because the interest rate on the Canadian business on this loan is going to be higher than what you might probably be able to get through one of their commercial programs. But technically, yes, you'd be available for it, but you would definitely still want to speak to your commercial account manager to see what other options they might have for you. Oh, it was doubled up, it looks like. Yeah. Yeah, so as I had mentioned, it could be retail, restaurants, beauty shops, essentially is what we'd consider, construction. Quite a bit. We have a large variety of businesses that are eligible, but anything really that's for profit and that does regular business operations would be eligible for it. Do you want to go? I don't want to take all the questions there.
So businesses that are not that are ineligible would be holding companies, farming businesses as well, and what else can I think of? Holding companies, non-for-profit organizations, farming. Those ones are not eligible for this program. The business has to be for profit, has to be making profit in order to qualify for the program.
So we do have the CALA program that is set up for farming. So that can definitely be something we can discuss, and I can provide you the information for that directly.
So we actually have right now, we do have Futurepreneur going on right now, which provides assistance and small business programs and loans for ages 19 to 39, I believe. 19 to 39. So between 18 and 21, I would say if you're 19 and up, you can definitely visit the www.futurepreneur.com, and there is a lot of information there to help you for startup mentoring and financing your startup business.
And so I also wanted to just redirect for that previous question here to the government website. So Alex, this is for you or anyone else who's interested in agricultural/farming. This is the program that they offer. I've just put it in the chat there. Yeah, so this type of business, so no worries, Lana. So for e-commerce businesses are definitely something that's eligible for that. In terms of because it's an e-commerce, so it's all done online. We don't do inventory, but the equipment needed to make it, that's something that you could get financing for, as well as if there was a storage or warehouse place and you need to do any renovations, you could definitely get funding for that as well. So is there a cost limit on the eligible expenditures? No, there isn't a cost limit because it's equipment or leaseholds that we'd be talking about in this case. The max would be just the 350,000 that you'd be able to apply for. It is pre-tax, so it's really just the total sum before taxes. And then would a startup bridal shop requiring finance for leasehold, startup costs, and inventory be eligible? It would be eligible to a certain extent. We wouldn't be able to finance for inventory. And then depending on, like, we could finance for leaseholds, that's not a problem. And then it just depends on what the startup costs you are inquiring about. Some of them may be eligible, some of them not, but you would definitely be able to get some type of funding. It may not just be for all three of these items placed here. Just make sure if there's any other questions.
So the term for the real estate property is usually 15 years for the Canadian Small Business Financing Loan Program.
Do we need? No, you do not need to purchase the equipment before getting financing. It's just one of the benefits of the program. Whereas if you got a regular business term loan, you're not able to take into account anything that you would have previously gotten. But with this program, you can go back up to 180 days prior to the loan getting advanced. And then also, once the loan is approved, our team doesn't actually send out the money until you send the invoices back. So if you haven't purchased anything and you're going to buy something, you get it approved for, let's say, 250,000. As you send us invoices, we will release the funds accordingly. You have two options in releasing the funds. Either we will pay the vendor directly, or you will make the purchase from the vendor and then we will reimburse you. You can choose either option at any time. But to answer your question, no, you don't need to purchase it before getting approved for the loan.
So what is the cost for design and manufacturing of a product? So for design, for example, if you are setting up a brand new store or finance or a brand new store or franchise, and design cost is involved, it would be considered as eligible cost. Now, to finance the product itself with designing, it depends on the cost of it. So if the cost exists of equipment for the manufacturing, then yes, it would be considered as part of, it would be considered as cost to be financed for you. I'm not sure if I answered it right, Kazeem. Do you have anything to add to that?
No, that was great. So yeah, the cost of the, yeah. So now we're gonna do the giveaway. So the question here that we have is going to be, name 3 eligible expenses and 2 ineligible expenses. And you can just answer that in the chat. Okay, I'm going to repeat the question again. Name 3 eligible expenses and 2 ineligible expenses.
So at the top of the, oh, there we go.
Okay, so you got the, Simon got the eligible expenses and now the 2 ineligible expenses. There you go, Simon. There you go. Perfect. Thank you, Simon.
Congratulations, Simon.
Congratulations.
You've won the Black Diamond Ball. Way to go. We'll look forward to seeing your application soon, Simon. Yeah, because I'm frozen.
Perfect. Okay, so definitely thank you all for being a part of this and taking time out of your evening to be with us and learn from us and listen to us and asking all the great questions that you have. And if either anyone wants to have any further discussion in the future, have any questions, my information is right there below on the ticker, either on LinkedIn or at my RBC email, as well as you'll be able to reach Louisa as well. And I'm definitely glad. Thank you all for joining us. Definitely appreciate it. And I hope everyone enjoys their evening and the rest of the week, even though I know that it's about to snow in the GTA starting Thursday again. But hopefully everyone enjoys their evening. And then we'll